So we are now going to be taking a little more deep dive now with the chief financial officers and the leading ones who are going to be once again sharing their views and their experiences on what they see the future role of the CFO is going to be. I would like to invite now our very distinguished speaker, Mr. Adesh Kumar Gupta, the Director and CEO of Grasim Industries-Aditya Birla Group. He's going to be speaking on the CEO of Tomorrow, the role beyond the contemporary. Ladies and gentlemen, Mr. Gupta has more than 36 years of very rich experience encompassing various functions and businesses across the Aditya Birla Group. He is presently CFO and the whole-time director of Grasim Industries Limited, in fact since 2009, and prior to which he held similar positions in the Aditya Birla Nuvo. He's also the global CFO of the pulp and the fiber business of Aditya Birla Business, where he provides strategic leadership to 11 plants located in India and abroad. And he's also recipient of several awards, including the Best CFO Award by the Institute of Chartered Accountants, by IMA, which is the leading organization for the CFOs, and also by Business Today. Please join me, ladies and gentlemen, as I now request and invite Mr. Adesh Kumar Gupta, Director and CEO, Grasim Industries-Aditya Birla Group. So you can come.
Good morning and warm welcome to all the participants. I would like to sincerely thank Economic Times for starting this initiative. I am fortunate that I got an opportunity to deliver the opening keynote address to the group of fellow CFOs. The theme of today's summit, the CFO of Tomorrow, the role beyond the contemporary, is very apt considering the rapid changes in the business environment. To begin with, let me briefly talk on the role of CFO. CFO is the key member of any top management team who works on scaling the business higher under the leadership of CEO. CFO supports the CEO with his brain, eyes and ears. When I started my career 36 years ago, there was no position of CFO in the corporate world. We used to have director of finance or head of finance who used to drive a robust and competitive finance functions to ensure the appropriate controls and checks are placed in for efficient and smooth operations of business. With business environment changing, they assumed the role of CFO and the role is continuously evolving. We as CFO have an ability to understand the wide-reaching financial implications of key business decisions in a very sound, reliable and superior manner. We have a unique ability to convert majority of this operational scenario into specific number-based outcomes associated with critical functions of business. These are very useful for business decision making and they play a pivotal role in evaluating the pros and cons of a long-term business strategy. As a result of these credentials, the role of CFO has been broadening over a period of time and it is transformed from that of a number-crunching accountant involved in cost and value management to a value creator and a growth project propeller who leads enterprise management. With the evolution of business environment in today's world, the CFOs are playing a role to develop effectively strategies for growth while executing the fundamental functions areas of finance. The macro business environment has been changing across the globe very rapidly in the last 2 to 3 years, which has its impact on the role of CFO. Let me cover the changes in the Indian context. India, being one of the key emerging and developing markets across the world, has seen a transformation in broader regulatory environment and its interlinked impact on the operandi of the businesses. Liberalization was initiated with the goal of making the economy more market-oriented. It leads to the development of free economy, that too in global environment. The larger participation has led to healthy competition, large-scale production and globalization of operations, reduced business cycles, global sourcing of raw materials and outsourcing of services to reduce costs. Advances in information technology and computerization has changed the business scenario by employing complex processes, systems-driven solutions, and use of business analytics, leading to ease of operations and speedy and sound decision-making. Traditional ways of finance, of bank-based financing has made for way of innovating techniques of funding through large private equity transactions and structured financing through globally spread investors, having the mix of finance through various means such as equity, debt. Apart from the right mix, the timing also has to be right to ensure that the cost comes down. With the development of organized and a global business environment, there has been a considerable increase in the number of stakeholders in the form of regulatory agencies, providers of capital, socio-economic agencies, customers and suppliers, in order to effectively manage the risk associated in the business with multiple stakeholders. Sophisticated systems and controls have been developed by organizations globally. The whole role of this corporate governance and stakeholders relations has therefore increased. With complexity of the businesses, the role of people in managing the businesses are increasing, which puts on us on development of right management team with dynamic roles. The outlook of the global economy in the short and medium term could evolve great uncertainty. Fluctuating energy prices due to surging demand and supply disruptions, large currency fluctuations, commodity prices rises, public government offices deficits and cost-cutting, inflationary measures in some countries and ongoing environmental challenges. The key result, this result is in VUCA, that is volatility, uncertainty, complexity and ambiguity. Understanding and anticipating the impact of these forces well in advance is the key in corporate growth and sustainability. To meet these challenges, the role of finance functions and CFO has consolidated, evolved in the following broad categories. First is strategic leadership, which includes decision-making on growth options through organic and inorganic means by enabling into value creative M&A transactions, strategic planning of the mix of products to be made, sourcing of different inputs and services and tie-up of the global locations, negotiating with the enablers for contending growth, while the CFO may not actually brainchild the strategy, but they could be a very integrated part in developing its structure, its overall execution, in assessing the actual performance as versus the envisaged targets, and in reformulating the same as per the business circumstances to meet the growth ideas. The business today has a lot of disruptive developments, and this strategy has to ensure that while we go on adding the value creating assets and ideas, we dispose of and discontinue value-destroying operations through strategic support. Thus, a CFO's role into decision-making should be evaluated from a perspective from whether the Executive Council of the business could draw some bigger picture while creating insights which led them to take a calculated and objective business decisions. Business operations have become very organized and global in the recent periods. This led to increase in lot of opportunities for inbound and outbound mergers and acquisitions. As part of this strategy's leadership, the CFO plays a key role in any M&A transactions, which inter alia includes strategic thinking for the deal, validation of the key value drivers for the deal, structuring the deal, conducting due diligence, arriving at an optimal valuation, and finally ensuring that the approval are in place. The next is ensuring the efficiency in the operations. In today's market, there are no barriers for integrations of operations. Say, for example, sourcing of raw materials is being done locally, internationally from in-house integrated facilities or external sources. Systems and sophisticated processes are integrated across the world for global business houses. While deciding the structure and the area of operation, it needs to be ensured the long-term decisions are taken after factoring appropriate regulatory framework, competitive developments and sustainability and sustainable delivery mechanism. Businesses have become global and requires a lot of global methodology to be adopted. As a result of these developments, CFO and the finance team needs to be very proactive and abreast about understanding the key global operations which have any financial repercussions. Some of the key areas of operations wherein CFOs provide valuable insights could include rigorous and robust planning and budgeting techniques with a long-term view on businesses, to build a robust and very detailed system of planning and budgeting, to carry out sensitivity analysis and long-term forecasting, to ask the if and but questions out of any situation and develop plans for corrective actions. Rigorous benchmarking of operations with the competitors. It needs to be ensured that the business units are appropriately located to compete with the other players in the front of lowest cost for sourcing of materials and highest realizations for selling the product and services. Developing sophisticated business processes supported by information technology. Modern IT systems should process the key attributes of speed, accuracy and control checks. The system should be designed in such a way that they have a built-in checks for the output, and the output should be presented in a summarized and accurate form. Ensure competitive strength in logistics and other service locations. However, the level of granularity at which the finance functions get involved in the operational aspect should be based on the need of the hour. Next is ascertaining key value drivers and working towards growth arising out of them. As we all know, an important part of CFO's job is to have a thorough review of performance variables that will actually create the value of the business. A value driver is any variable that affects the value of the company. Value drivers must be defined specifically at a level of detail consisting with the decisions variables. Generic value drivers such as sales growth, operating margins and capital turns might apply to most businesses units, but they lack specificity and cannot be used well at the gross root level. Key value drivers are not static and they must be regularly reviewed by the top leadership, and also the value drivers cannot be considered in isolation from each other. This is where the modern CFO has to go, act right and works towards ascertaining the relevant value drivers and using it in the growth strategy. Identifying key value drivers can be difficult because it requires the CFO and his team to think about its processes in a different way. Often, existing reporting systems are not equipped to supply the necessary information. Mechanical approaches based on available information and purely financial measures rarely succeed. What is needed instead is a creative process involving much trial and error. Although only a small part of the total business system, these key drivers have a significant impact on value, are reasonable from month to month and can clearly drive profitability in the long run under the leadership of CFO. Next is innovative fundraising. Traditional ways of fund-based funding has made way for innovative techniques of funding through large private equity transactions and structured financing through globally spread investors. Having the right mix of the finance at the right time from the right sources continue to be a key responsibility even in the present environment. The effective treasury management continues to be one of the key success factors of the CFO. Next is developing holistic and integrated risk management. As we all agree, today's CFO has an expansive financial perspective with a view of the big picture. That is why, with its bearing on all aspects of organizations must be addressed under CFO's leadership. Holistic risk management demands top-tier attention for three primary reasons. The pace of business complexity is so brisk that it is outpacing the sophistication of risk management, leaving companies vulnerable. The risk implications of social media are tremendous. Business ramifications are immediate. The correlation between risk management and bottom line performance is strong and direct. The link between risk and reward is becoming increasingly important for this company as the industry grapples with the challenges of growing stiff competition from the global players in the industry and its stakeholders. Some risk taking is inevitable if an organization is to achieve its objective. Therefore, the CFO needs to frame a well-defined risk management mechanism, converting holistic views on risk identification, evaluation, and management and monitoring of both business and non-business risks. CFO must use risk management to improve the profitability of results, optimize resources, protect organizational assets, and enable growth. Seizing business opportunity is often heavily dependent on the CFO's ability to identify access and manage risks. Inability in these areas is risking business and exposing vulnerability. The next area is enhancing investor relation management. In view of the increased role of the global and shrewd investors in the company's growth, good IR can be a key factor in the price of a company's shares and the interest rate it pays to the debt. So CFOs must stay up to date on their company's sustainability policies. The IR also results in 360-degree feedback on the market perception of the company vis-a-vis competitors and peers for involvement. Next is ensuring corporate governance and complex regulations for the global geographies are being met. We as a CFOs need to engage the board and various subcommittees in keeping them informed of changes with legal, regulatory, industry requirement and standards. We need to work to ensure that the company is looked with respect by various stakeholders for ensuring their interest in today's world. We should further ensure that the company maintains an open and transparent mechanism to ensure that no one, including the promoters, can take any undue advantage of the company's resources at the cost of other stakeholders, including the minority shareholders. This would inculcate a spirit of professionalization and corporate ethics in the organizations. All these roles are forward-looking roles and are just reverse of a general perception that the business facility that conventionally CFO and its associate finance functions played the role of a post facto finance controller. The CFO today has started playing much more constructive, robust, and proactive and forward-looking enabling role which helps in business leadership achieve its long-term objectives. The current generation of CFOs have seen significant changes in the business environment, and this has necessitated adding new dimensions in the role of the CFOs. I would like to conclude by saying that CFOs are always been guardians of the best business processes, practices, efficient control and risk mitigation tools, treasury, financial analytics. They virtually are the conscious keeper of the organizations. In the rapidly changing world, the CFOs, through their leadership skills, have become agents of change, creating smarter work patterns through their organizations and insights into insights that drive organizations and help achieve better results. Thus, the role of CFO has eventually transferred as a strategist, deal maker, risk mitigator, a growth propeller, a financially sustainability partner. And he is second only to the CEO in overall business scheme and ready to succeed him in managing the business as and when the need arises. I am sure all of us will transfer ourselves to meet the challenges being thrown in the new economy. Thank you.